27th conference of the Association of Futures Markets is happening right here in Nairobi. And we have had the privilege of hosting Chris, the president of the association, to understand how is the sector doing, not just here in Kenya, but across Africa and even in the globe, to just understand what can you as an investor get to tap on and much more. Welcome to the Trading Bell. Chris, welcome to the show.
Thank you. Thanks so much.
Welcome to Nairobi again. Once again, is this your first time or you've been here?
I've been very fortunate to attend Nairobi in about 2018, but been great to be back.
Yes.
Amazing to see the development on the infrastructure side of things, so congratulations. You can be very proud.
Excellent, excellent. Let's go straight to the conversation on why you're here. And there's a conference happening the 27th. And I just wanted to get a preamble for the sake of the viewers who probably are relating with this for the first time. When we talk about futures, the association and everything else, what's your goal and mandate?
Yeah, so when you go back to why AFM was established, many years back, we go down nearly 27 years, our conference, but during COVID, we never had one.
Yeah.
But the idea was to try and get parties together with a common objective of developing derivative markets.
Yeah.
So it's trying to encourage and promote the development of derivative markets, but also as AFM, we're a small membership of participants across the globe. And the idea is to arrange a conference once a year where we get together and really just interact, share openly. What's working for us? What are the challenges? How do we keep on promoting derivative markets across the globe?
Yeah, and you're right. One of the things that I've seen here in Kenya is that, yes, the appreciation and the appetite is getting there, but people would probably say it could do better. And I'm sure you have observed that. But I just wanted to get your perspective from your bird's eye view. How is the sector doing? Not just in Africa, probably even globally. Is the acceptance happening?
Yeah, so derivative instruments, and which again, NSE have launched futures and have got the approval to launch options on those, have been trading globally for many, many years. But for Kenya, it's super exciting. Why? Because it's the only second country on the continent to be able to offer derivatives. But if you look globally, and particularly if you look at the Chinese or the Indian markets, derivatives are phenomenal in volumes. They've really grown. And it comes back to the purpose of using a derivative. The underlying is to manage price risk.
Yeah.
But so you have a hedging component as well as a potential speculative component. And it's getting those two participants to adopt the use of the derivative instruments. And first of all, understand, are you a hedger or a speculator? But the important thing is use those instruments. So globally, definitely the markets that are growing the fastest are going to be based out of India and China.
Okay. Wow. Lovely. And so when we talk about penetration and as you're saying, we're getting there, what are some of the challenges underlying for us to achieve this?
I think, a lot of the youngsters today want instant gratification.
Absolutely.
And there's so many sports betting applications, there's so many cryptocurrency platforms that they get influenced and trade those rather than coming back to the more structured markets. So your speculators have found an easier method or easier instrument. Okay. But I think when it comes down to the derivative market, it comes back, it's a platform, the primary purpose is to manage price risk. So if you had a listed stock on the NSE and you're concerned that share price was going to fall, you would use the derivative instrument to lock in the price and protect you. So if the market tanks, you can sleep well because you've used the instrument to manage that price risk component.
How is it like in South Africa? Just curious to know.
Yeah, so I think in the commodity space for South Africa, we were fortunate. There was a major shift in policy. Previously, the government set the price of all commodities, and the government moved to deregulate that, and that created a lot of volatility in the market. And with volatility comes this need to manage price risk. And so the derivative markets have done well.
Okay.
Yes, for commodities, it's 30 years this year. They celebrate their 30th anniversary. Yes, you only have a few products that are your mainstay where there's a lot of liquidity. It's not that you just launch a product and instantly you have 10,000 contracts trading.
Yeah.
It takes time. It
Okay.
is a deliberate process, and I think that's what you asked earlier on, is what are the challenges?
All right.
The challenges is trying to make sure there's more and more participants using the instruments.
Yeah, you're right. Let's move to what you're doing as AFM in terms of initiatives, projects to promote the adoption of derivatives and even just the derivatives markets in general. What are you up to?
So AFM really is about education.
Yeah.
Education.
Okay.
And so part of the focus when we arrived in Kenya, we did a pre-conference workshop at the NSE focusing around what does it take to get derivative markets up and running and liquid. So a big role is the education, but the other is also sharing openly and honestly what's working.
Okay.
South Africa, we have our war stories. We know what really has challenged the growth of the market.
Yeah.
It's trying to share that with other participants to try and make sure they can avoid those challenges and also grow a lot quicker.
Okay. What about emerging opportunities that you see? Because you are seated here, every time I know you're thinking about what can we tap on. Are there any emerging opportunities in the market that you believe AFM is uniquely positioned to capitalize on?
I think for Kenya is how do we connect Kenya with one or two other strategic derivative markets to help feed the liquidity.
Okay.
And practically what does that mean? Is how do we connect South African derivative market participants to the NSE's derivative market and to try and complement each other and create that awareness. The same as if you have a number of Indian participants, how would they access the market and be able to use the instruments?
Okay, no, lovely. Any examples of what AFM's impact on the development in the derivatives market?
Yeah, so the impact is we're still going.
Yeah,
we're an association that keeps growing. We've just adopted 2 new members to the association, so I think we're growing. The impact is you finding more and more markets establishing and connecting, and I think on the continent also there's a number of the commodity markets out of Zambia, out of Malawi, out of Ethiopia, out of Ghana, all starting to join the association just to learn from those experiences.
Okay, so as we come to a close, I'm curious to know about your stakeholder mapping and collaborations that you're up to ensure that you're achieving your goals.
Yeah, so today we have a panel all focused around collaboration.
Okay.
It's been chaired by a gentleman who's been in the market for many, many years, Christian Moller, who's based out of Malawi, small country. And there again, Malawi is looking to collaborate with Zimbabwe and Zambia to see how can they enable more regional trade of commodities. So that is what the whole spirit of collaboration is all about, is trying to facilitate that.
So what's your vision? You're the president.
So for me is we need to be able to see more actual introduction of derivatives.
Okay.
We share a lot of examples, and that's where it's so exciting to see NSE getting the clearinghouse up and running, getting the license from the regulator. I think what we really unlock the markets is just that support from government, that enabling policy that allows for a derivative market to work as efficiently as possible. Yeah. And I think if you have some strategic governments who say, I really see the value in the price risk management tool of a derivative instrument, let me support that. Maybe the government doesn't have to invest in the exchange, but they just need to supply that enabling policy. And then we would have way more derivative markets across the globe.
Lovely. Chris, before I close, you've mentioned that, the generation that we have really are people who are seeking instant gratification as a challenge, And one of the things that I have observed locally here is that some people view understanding futures derivatives as a complex thing. And you've talked about education, but my question is this. Is there some radical thing that needs to happen when you look across the globe? The challenge the same as Kenya here, where you're talking about, understanding the concept or just maybe probably they put it in their mind, this is not my thing.
Yeah,
What do you deduce out of it?
You're 100% correct. I think when someone hears the word derivative, they immediately, their eyes roll back and they think this thing is so complicated.
Yes.
But it is so simple. When you drill it down, and I think that's where the role of exchanges, the role of our members, our brokers is, it doesn't have to be complicated. We need to keep it simple. What are you doing with a futures contract? You're forward buying or forward selling something to lock in a price to manage your price risk.
Yeah.
Simple as that. What are you doing with an option? I'm either buying floor price insurance or I'm buying ceiling price insurance. And it's just getting those concepts over the line. Yes, it does get a bit more complex in case of money flows when you have a position, but it's just getting, I think we need to be better in how we articulate how these instruments work.
Lovely. And we wish the association the best in helping us do this.
Thank you so much.
Thank you so much for your time.
Thanks.
There you have it. Chris has spoken, the president of AFM, that's the Association of Futures Markets, and they're right here in Nairobi and are doing a fantastic job in ensuring you get to understand more and even put down policies that will help us really embrace futures. Thank you so much for your time. I'll leave you now with the markets. Time for the markets, and joining us is Jesse Ludenyo from KCB Investment Bank. Jesse, it's good to see you. Welcome. And let me start by asking you to just give us a brief of how the market is doing.
Thank you, Maina. Thank you for having me. Well, we have seen quite peaked interest in the market in the first few months of 2025. Which is as a result of the decline in rates on the fixed income side, which has piqued interest, particularly in equities, and therefore a lot of local capital is flowing into the markets, leading to market-wide rally in prices.
Okay, excellent. And just looking back at the year, 2024 was quite exciting when you looked at how the market performed. All indices went up, a lot of things went up. We were even the best in Africa. And I just wanted to ask you, are you seeing the same thing? This is Q1 and ongoing. Are you seeing the same thing happening now?
Seeing that rally that began in final quarter of 2024, actually continuing into 2025. And this is likely going to continue for at least for quarter one of 2025. However, we are seeing that some prices have actually reached their peak levels when we measure based on the last 250 trading day averages. And for example, when you look at banking sector, we are likely to see a flattening out because that rally has been is being driven by a lot of dividend speculative investors. So a lot of dividend investors have been pushing those prices towards their 250-day highs, and therefore we're likely to see that flattening out, particularly moving into quarter two of 2025.
Okay, excellent. Let's get straight to the week on week. This is Monday to Monday of the markets, and I was looking at some of the top gainers, top losers, of course, the indices as well, and the top movers. And I want to start with the top gainers. We've seen some interesting names coming up here, but interesting to see even Centum Investment at a whopping 18.9%. TPS, Express Kenya, BOC, Unga. Any stock that you would want to mention? Anything interesting about?
Yes. So particularly for Centum Investment, you realize after the corporate action that they undertook, the buyback, that led to revaluation of that particular stock. And therefore, coupling that with the overall investor excitement, you will see that that price was the top gainer. Okay. And when we look at on some of the other counters, we are seeing also a bit of activity in the agricultural side. So with a stock like Lemuru trading at its lowest, based on our statistics at 200 and at 300, which has its lowest at 299. So we're seeing a bit of value undervaluation, particularly with that particular stock. Also across the agricultural sector, we're also seeing Kakakuzi and IGAD also being fairly undervalued. So on a week-on-week basis, I would say that would come out strongly as a playing factor. The rest, Uchumi, Standard Group Limited, East African Portland, basically, I would attribute that largely to speculative trading.
Okay, thank you so much for that. And you're talking about reevaluation, and I think over the time, I've had a few persons, especially in the market, saying that there's a whole concept of looking and reevaluating our stocks. So some of them are undervalued, others probably need to be rechecked. Is that the same sentiments analysts on your end see in some of these, stocks that we have?
Yes, I mean, we would use different metrics. So for example, in the banking sector, some of the key metrics that we would look at would be price to book and price to earnings ratio. And we would compare that with the sector median or the sector averages. And when we do that from our statistics, we realize that certain banks, such as Stanbic Bank, KCB Bank, tend to have very low price to book ratios compared to their sector medians and sector averages. Again, when we look at asset-rich stocks, particularly we're looking at agricultural manufacturing, and we look at we value them based on a net asset value per share, and then you would still see the same stock such as Limuru Tea, EGADS Limited being highly undervalued in terms of net asset value with respect to the industry averages and in the industry medians. If you look at the same use for banking and we juxtapose them towards insurance, then you're likely going to see a bit of undervaluation with regards to Kenya Re, Liberty Group, and Britam, with regards to the sector averages. So definitely we still have definitely noted keen undervaluations in particular stocks in the market, and this is something that we keep on reporting about.
Okay, thank you so much for that. I don't know whether you have any comment on the indices. Looking at the indices, they look like there was not so much movement within that week, or what's your observation?
Well, with regards to the indices, first of all, the all-share index, given that you're not observing much activity in terms of differential trading or volatility, is because first of all it's highly weighted, skewed by Safaricom, which comprises of the largest weight, and therefore when price doesn't move as much, then the volatility on the index also remains relatively contained. What we observe rather keenly would be to look at NSE 25 and NSE 20, which you would find that some of the stocks having performed very well, whereas some of other stocks within the index not having performed very well, and therefore you would still see that also contained volatility across the indices. But remember, we are coming from a year 2024 where we had about 34% growth in NASI. We had about another 33% in NSE 20. So we're coming from a year of exemplary performance on all across all indices. So I guess from us, we are at a point where we just want to observe what the performance would be in Q1, and then try to anchor that for the rest of the year.
All right, thank you so much for that. Finally, in this particular section of the week on week, looking at the top movers, I see Kenya Re, I see bank. I mean, I can see a bank there, cooperative. I can see Safaricom, Kenya Power, KCB Group as well. Any comment on any of that? Why we have this particular top movers?
Well, across, Kenya Re was one of the stocks that was highly in our recommendation list in Q4 2024. So we are rather not surprised about its performance. We are also expectant of a positive dividend come the full year announcement around that. Remember also. Minor that in Q1 so far 2025 we have seen Kenya Power, recover significantly. So when we look at that, that is based or it's anchored on expected positive performance, especially given that as at half year they had 14 billion in profits before tax. So our projections are that if they're able to hit a significant number, about 50 billion at full year, then investors should definitely expect a good dividend coming out of Kenya Power, and therefore price will likely adjust. Of course, that is subjective to whether the proposed rights issue would take place. If that takes place, then it would affect our numbers quite a little bit. From the banking sector on that list, of course, KCB, as I spoke about, it's price to book relative to industry average, but we're also expecting banking results coming up, and therefore that will give us a clearer picture. We are still positive on dividends. We still expect that banks across the sector will give us very positive dividends. We expect dividends from KCB, ABSA, Standard Chartered, Stanbic, and very good dividends for that matter. And therefore, we will still see price right now adjusting towards that trend. Then after that, after the dividend payout, then we would expect to rebalance that.
Okay. Thank you so much for that. And finally, I mean, I saw the central bank release some of the assets and, how the, money markets are performing, quite significant. And we have seen new entries as well. But also with the interest rates really changing, I don't know what you're observing from your investors, especially the consumers, the retailers. Are they moving more towards the equities, or what are they doing? Are they moving towards the patient money, in your observation?
Yes. We're definitely seeing a lot of peaked interest towards equities. Okay, so we still have the growing number of investors on the money market side. But remember, money market is largely used as a product of storing wealth. It's largely used as a wealth management product. It's not necessarily an investment returns oriented product. Okay, it's a savings product. And so with that, moving into 2025, we're also seeing an increased number of inquiries on the equity side. So whereas money market is also growing, there's also the growing part of equities, and that is expected as investor sentiment changes, and therefore the contained rates in the money market is largely due to the central bank rebasing their rates lower. We do not see a reason why they would maintain elevated rates. We still expect them to continue containing rates. And therefore, we expect that money markets will begin stabilizing around the 9 to 11% range, and therefore we expect an uptick in equities, and that's why you're seeing some volumes in equities aside from the traditional volume counters or the movers. You're seeing a bit of interest in some other stocks that are not necessarily traditionally volume movers.
Mm-hmm. Okay. Thank you so much, Jesse. I think I want to close it at that. I will check with you next week and see how we're still performing in the markets. But of course, to our viewers, that's how it has been. A very interesting week, not much of movement, but we hope probably the excitement will still go on. As Jesse has put it, the banks are about to release their results. They're actually starting. So we can't wait to see that, and we'll keep you posted on this. Thank you so much for your time. Bye-bye for now. See you next week on The Trading Bell.